Right, a very big welcome to all our attendees this morning. Thank you very much for joining. Exciting morning as always, and of course, this morning we're going to talk about leveraging e-commerce for growth, and of course, an economic review and outlook for South Africa, and all powered by Nedbank this morning. So we've got two top-of-the-line guest speakers, and also to all our attendees out there, please let us know where you're from. What your expectations are this morning. And of course, as we go along, if you've got any questions, please pop them into the chat. And as per always, we know that the chat moves quite quickly. So if we don't get to answer your questions, please, we will come back to you after the event. So we hope that you find the morning insightful, educational, inspirational, because I'm certainly going to learn quite a lot, and I'm certainly looking forward to it. And as we always know, Nedbank powers amazing sessions, and I certainly believe that this one's going to be equally as good as they all have been over the past few years. So first of all, we've got I met him for the first time this morning, Olebogeng Mogale. He's the executive of Digital Fastlane Nedbank. Olebogeng, wonderful to see you. Thanks for engaging me earlier offline. I find you extremely interesting and inspirational. And of course, I'm looking forward to this all-important topic, leveraging e-commerce for growth. Very good morning to you.
Good morning to you, Mike, and good morning to everyone this morning. It's a great privilege to be here, and I'm excited to be part of the conversation.
Absolutely. And as we know, Olebogeng, over the past 2.5 years, our lives have changed. And I asked you that question this morning. Are you working from the office or home? And you said mostly from home. But that's life the way it is now. And of course, and it also helps with the fuel prices, working from home. And like you said, a lot more productive. But I know that Nedbank is very flexible, and they have an extremely professional organization. So allowing their people within to work the way they want to get the job done. So it's always I always ask that question. And good morning, guys. I can see Pat there. Good morning, Pat from Tongati. Sean, good morning to see you. Sean from Valmarina. Guys, let us know where you're from. Sonia, there we go, from Pretoria. You know what's amazing, Olebogeng, over the past 2.5 years, we've had attendees from not only all over South Africa, but from all over the world. So, and prior to pandemic, we've never been able to do that. Morning, Thelma, Meadowdale, good. Welcome. It's always amazing to see is that the same people coming on week after week. And yes, of course, we get new people. Boozer, good morning to you from KZN. We always have a big turnout from KZN. Ponso, there we go, from the Free State. Also always a great turnout from the Free State. So what we do know is that these are national events. And, prior to pandemic, there were some disadvantages, as you will know. We used to do massive events and predominantly regional at a time. But now, of course, our discussion this morning is nationwide. Rachel, good morning, Rachel from Joburg South. So guys, keep the chat going. Have some fun with us this morning. Please be engaging. If you've got any key questions as we go along, pop them into the chat. And also, I always have to say, house rules. With technology, sometimes things can go wrong, but don't leave us. We'll be back. And fortunately, over the past few years, we haven't had any glitches, but we do put that warning out there. Please don't leave us, because things do go wrong, especially now with load shedding and things like that. It doesn't always help. Right, let's start the discussion, Olebogeng. And again, thank you for joining us. Now, my first question is, of course, e-commerce is on the rise in South Africa, especially since COVID. Do you think this growth trajectory will be sustained into the future?
So, Mike, I think certainly, although I need to hasten to say that the growth rate will never be the same as what we had from 2019 into 2020 and 2021. So it will definitely plateau. But I think just like all aspects of our lives, I think COVID has had a massive effect on e-commerce. It has definitely catapulted it, research and studies out there, depending on your definition of e-commerce, suggest that we've had a growth rate of between 25 to 66% as a result of COVID. Looking forward, I think there'll definitely be changes in terms of patterns of consumer behavior, with people who traditionally did not trust e-commerce platforms being a little bit more amenable, and will continue to use them going forward. But I think I must also hasten to say is that because things like shopping are a great part of one's lifestyle, and lifestyle choices and experiences, we're still going to have a kind of a movement back to a hybrid kind of a model in terms of how consumers purchase. And I think that the growth rates will definitely plateau, but it'll continue to grow at a rate much higher than the economy insofar as e-commerce adoption is concerned.
Okay, great. Yeah, absolutely. You know, e-commerce has become a big word, and you know, I was having a discussion the other day. A lot of people now are leaving out the e because now commerce is e-commerce. So it's quite interesting. It's like email; the dash is gone. It's now mail. You know, so things have changed. Okay, Olebogeng, second question I have: what trends are some of the most notable trends in e-commerce right now, and what can we expect in the future?
And I think insofar as trends are concerned, the starting point for me is that in the context of 4IR, the reality is that the main difference between the current and the future is really more around scale and adoption and application of these technologies. Most of the technologies that are kind of making the waves today are actually technologies that started years ago, sometimes decades ago, but they're at a point where they have reached scale, and sometimes they kind of then appear as though they are new technologies. So I'm saying that to make the link between what's happening now and what's going to happen in the future. Some of the future technologies are already being tested, piloted, and so forth. And as a good example, I think that the world of augmented reality is going to change the way consumers purchase. It's actually going to change the way consumers, I guess, interact with products, with services, because it's really about bringing the physical world and the virtual world together. And that technology is maturing, it's been built upon and translating or transcending into a new phenomenon that is called metaverse. It'll definitely be driving some of the huge changes in the e-commerce space. And what researchers also say is that it's going to actually reduce the cost to sell. It's going to reduce things like returns and when customers have bought a product, because through this augmented reality paradigm, you're almost able to try out products. If you think about a pair of spectacles, you're able to actually try them out and see how they look on you before you actually commit to purchasing, which then reduces the likelihood of you returning the product, and then it reduces the cost to serve or the cost to sell on the merchant side. I think there's going to be greater cross-border payments, which also means, or rather cross-border trading, which also means that new opportunities for merchants and suppliers in different geographies will emerge to be able to access markets outside of their immediate market. So that's also quite exciting. The other trend that I think is important, and it's really being driven by both, I think, climate change and the changes from a consumer value system perspective, where people are starting to become more interested in how responsible relative to the climate are the producers and suppliers of these products. So what goes into the production processes? Are you harming the environment? Are you doing what you do responsibly? And so more and more consumers are starting to ask those questions. And in that particular context, we think that greater application of technologies such as blockchain will become quite prominent, because it's a very, very reliable way of proving basically the provenance of any goods, to say for certain that this good comes from this source, and therefore we can trace under what methods it was produced, and that gives consumers a little bit more choice in terms of who they want to buy from. I think those are some of the trend. The last one I'll just call out is around embedded finance, which really gives, I guess, consumers a little bit more affordable means of purchasing goods in e-commerce platforms. In the process, assisting merchants to actually increase their sales. So I think that those are some of the trends that we're seeing, and of course, the utilization of data science, artificial intelligence, and machine learning to actually predict consumer behavior to provide customer service. So you'll see in most e-commerce platforms already a chatbot appearing when you're browsing and trying to guide you and so forth. So those kind of trends will continue to proliferate over the next couple of years.
Absolutely, and it also presents an amazing opportunity for SMEs out there, whereas probably many their target has been very local, whereas now the marketplaces can be global, if you like. So do it right and get your right platforms, and your reach can have massive impact on your growth in your SME. So it does represent a great opportunity. I'm just thinking if there's any coming through here, which of the trends mentioned. Yeah, absolutely. And of course, my next question to you, Olebogeng, is that what advice do you have for businesses out there on how they can take advantage of e-commerce?
Yeah, so I think for me, there's two main things. The first thing is that you always need to think about your go-to-market strategy in what we like to call an omni-channel way. So you've got your physical presence, you've got the online presence, and the two kind of need to speak to each other. So this means, as a very practical example, the ability for a customer to start a transaction online and complete the rest of it in a physical environment without you having issues around reconciling and tracing that particular transaction end to end. I think that's quite important. That's the first point. And I think the second is around, obviously, greater usage of social media, which it's a very obvious thing to say, and many businesses, particularly small businesses, do adopt and find very, very useful in terms of creating engagement with would-be customers, but also putting their brands out there. So I think engagement is as important as the making the sale, because oftentimes a sale, to get it converted is a couple of steps from a consumer perspective in terms of their mental model. So it's kind of important that you are as present as possible and top of mind. That's the first thing. The second thing is that I think it's important to obsess a little bit about the offline, what I'd call the offline steps of the experience that you provide, or your sales processes. Do you have reliable logistics? Because that actually matters. You need to strengthen your back office processes, your exception handling processes, because for me, those are the things that actually differentiate you, because consumers expect things to work. When I make a purchase on a platform, I I expect that purchase to actually happen. But I think the more critical moments of truth are things like, what happens when something goes wrong? Do I have someone to talk to? Do I have some sort of support? And this is to my earlier point around omni-channel, because if you integrate your channels and your platform, you are able to actually easily service customers whose transactions actually started necessarily on an online platform. So again, if I need to return the product for whatever reason, how seamless is that particular experience, and how quickly do I get my refund, and all those kind of things. I tend to find that businesses neglect those aspects of their sales processes, and only obsess too much, or only obsess about the front line side of things, which is converting the sale. But I do think that the critical moment of truth is what happens, or when there are exceptions, how you actually deal them. That's what will create trust, and therefore a sense of stickiness and credibility that allows customers to come back to you.
Great. Some good feedback coming through here, Olebogeng, and Sonia in the chat saying, wow, Olebogeng, such a lot of info in such a short time. I'm glad I checked into this one. Thank you for that comment, Sonia. Yes, and we're getting quite a few on the chat here, Olebogeng, about payment partners. It's vital to have a good payment partner. What is your take on that?
It's absolutely critical, and in the e-commerce space, sometimes that's a bit of an interesting cost aspect for a seller, a supplier out there. So it is important, one, to really shop for the most cost-effective way to accept payments. Secondly, I think to find vendors that have as many payments accept, because perhaps to the earlier question, I think one of the big trends we're going to see in the e-commerce space is starting to actually change, is a greater adoption of different instruments of payment. So we're seeing the emergence of different types of wallets and so forth. We're seeing different types of currencies actually being made available as means of payment. So I think to maximize the opportunities in the e-commerce world, you really want to partner with people that continue to innovate, to add more capabilities for you to accept different forms of payments.
Okay, thank you for that. Olebogeng, I've got a final question for you. You have mentioned B2B. As ever, you are now launching a B2B marketplace. What is the big idea behind it?
So our B2B marketplace is and it's in direct response to, I think, one of the major needs of small businesses in particular, which is access to markets. So that's really the big idea behind it. So meaning an additional channel, an additional model of or route to market. That's the first point. The second point is that from a sourcing perspective, through a marketplace like this, you then have a variety of sellers of goods and services, although from another perspective, we've only started with the goods marketplace for now. But I think choice, variety, and I guess a convenient way of actually sourcing goods, where it's a lot easier to compare various suppliers of a particular product, ask them for quotes quite easily and make those comparisons before you make the decision to commit, which actually saves you a lot of time and overheads from a sourcing perspective. So those are the two main things we're actually trying to solve for. So B2B marketplace is more of a matchmaking platform, providing smaller businesses as well as larger businesses different routes to market. And it's underpinned essentially by the basic e-commerce capabilities, payments, where we use an escrow facility to ensure that because you're curating interactions between businesses that do not know each other, they've never shaken hands, there is a trust element wherein as the company that's sourcing, you know that your money will not go to somebody that had no intention or capacity to deliver against your order. And then as the supplier, you also have the comfort that you're not going to fulfill orders for businesses that actually didn't have the intention or the capacity to pay. So we guarantee a payment upfront by collecting it from the buying company, holding it in the escrow, and then when the goods have been delivered and the buyer is happy, then they get the funds get released. So that's the one component of our B2B. And there's a second one, which I think is even more fundamental, which is around access to working capital and access and improving liquidity, which I think is obviously quite a burning platform for most businesses in the kind of post-COVID era. And there, what we're trying to say is that beyond the matchmaking, how do we take existing relationships? So think about a supplier and his existing customers. He obviously has a debtors book where he issues 30-day accounts, 60-day accounts to those particular customers. And we are saying, because lending is not your core business, it is our core business, how might we take over some of that risk, provide your buyers with a credit facility that they can use on the platform, and they get some really great benefit from a interest-free perspective, so they can then make purchases over the platform, which then means immediate settlement or immediate cash for you, no risk, no impairments, and your liquidity gets improved, and you can redeploy that money into your operations or into other things. On the other hand, it allows the buyer to actually, do something else with their money and more interest, or redeploy it into something else, because you have up to 60 days before you have to pay any form of interest on that particular facility. So we think that this will be a great a game changer insofar as combining lending and e-commerce from a B2B perspective. It is something we are piloting with a couple of our business banking clients, and more clients are actually trying to participate in this particular model, which we call the closed loop model, because it's not about the matchmaking, it's to take your existing relationships and just solve the liquidity problem. That's what our B2B really is about.
Olebogeng, short, powerful, insightful. Thank you for your input and taking part this morning. We're going to leave you for a while and bring you back at the end just for a closing message. But again, thank you very much. Truly grateful for these insights, and I know that our attendees out there agree on that. So thank you very much.
Thank you very much, Mike.
And then, of course, our next up is of course, the privilege again to bring on stage Nicky Weimar. Nicky is the chief economist of the Nedbank Group, and it's been a while since we engaged. Nicky, thank you for coming back. You've always got a very important message, and especially SMEs throughout South Africa are really interested to see what the outlook looks like with regards to the economy. So thank you for joining us again.
Absolute pleasure.
Okay. Sorry, I just wanted to make sure that I won't be a sec, Nicky. There we go. I just want to make double sure my, as you know, we go through this load shedding. So I've got a few backup systems here, but it's all good to go. Again, thank you, Nicky. Thank you for taking part. It's been a while. I think we engaged in the midst of the pandemic, but let's look at it again. And Nicky, what your role at Nedbank, a bit about yourself, if you don't mind.
Oh, I am part of the gloomy profession, which is, of course, being an economist. So what do we do at Nedbank? Well, banking is a very cyclical business. It is directly tied to economic prospects, what's happening in the economy. If the economy slows, banks feel the pain almost instantaneously. We feel it really on the deposit side, and that's the funding side of our business. And we also feel it, of course, in terms of the lending side, which is the asset side of our business. And our job as economists is really to warn the bank, to keep the bank informed as to the state of the business cycle, how we're faring, what's likely to happen to credit demand, what's likely to happen to inflation, to interest rates, which is the cost of our credit, and where are the risks that they might not be seeing, that they need to prepare for and need to plan for. So we play an integral part in the planning side of the business.
Interesting. Now, Nicky, how has the South African economy shaped up in the face of the displacement by Russia's invasion of Ukraine?
Well, actually, we've not done as badly as many economies, and that is partly because we are, of course, commodity exporters. We produce and export commodities. And the moment Russia invaded Ukraine, or they made the decision to do so, I mean, first and foremost, it's a humanitarian crisis of note. We have over 5 million refugees as we speak and growing in Europe. If you look at Poland alone, their population grew with over 2 million people in 1 month. I mean, it's absolutely astronomical. You cannot kind of wrap your head around that. So that's the one side of the war. But of course, Russia is a major commodity producer, and Ukraine is a major food producer. And so the outcome has been a resurgence in commodity prices, and South Africa is an exporter of commodities. We compete with Russia in a lot of areas, certainly platinum, palladium, coal production. And so the bottom line is that we've actually benefited through our terms and trade. So we've not been as vulnerable, we've not been as exposed as many countries that are, in fact, net importers of commodities. And many of those countries do reside in Africa, and they've been particularly hard hit. But we've also not been immune, because we have felt the effect of that through higher inflation. Inflation in May rose to 6.5%. I haven't seen the latest number. It's due to come out at 10 o'clock, which is in a few minutes' time. But our anticipation is inflation will rise over 7%. We felt it through higher fuel prices. We felt it through higher food prices. And as a result, we've seen a fairly rapid increase in interest rates, which is also likely to continue. So that's where we felt the effect. And of course, this hits consumers first and foremost. It hits them in the sense that inflation erodes your purchasing power. So it really erodes your disposable income. You've got less money available for spending on discretionary items. And higher interest rates, of course, means that just paying your existing interest on your debt now cost you more, again, reducing the income you have available for discretionary spend. So we've not been immune, but we haven't been the worst affected nation out there.
Okay, some positivity there. Now, this is a big one for not only SMEs, but consumers throughout the country. What is likely to happen to local food and fuel prices?
All right, so fuel prices, we absorb already a big increase, the latest one. Going forward, I think it's slowly going to start coming down. I have to say, though, oil market forecasts are constantly being adjusted upwards. So the market is getting this wrong. People have been anticipating that the worst is over in the oil market, that the oil market will adjust. But I think at the heart of this, there is almost 2 decades of underinvestment in capacity in fossil fuel production. And really only have a very few countries that actually have spare capacity, one of them being Saudi Arabia, Qatar to a limited extent, and then, of course, the US. And the US, we are finding that they're not responding. They are really directing the bulk of their additional supply towards their own country and securing their own energy needs. For Saudi Arabia, there is a reluctance, obviously trying to play a game there, trying to get as much of the higher price as possible and boost their margins. And then, of course, for Qatar, they don't have that much spare capacity. And in almost all other countries, you have seen strain coming through in terms of capacity. For example, OPEC has often increased their quotas in recent months in order to deal with the current crisis. But what you're finding is that a lot of marginal producers like Angola, Ghana, and so forth, they actually do not have the capacity to produce more. So raising the quota has made no difference. They're not meeting those quotas as we speak. So supply is truly constrained. So in that sort of environment, the only sort of factor that could bring us towards an equilibrium is if demand slows. Now, demand is in the process of slowing globally, which is also bad news because that means weaker growth. But I think you are going to see that effect. And as demand slows, which will probably be during the process of next year, you will see oil prices starting to come down. But the bad news is we're going to have to deal with oil over $100 a barrel for, I think, probably pretty much the rest of this year. It might recede a little bit to between $190 a barrel by the end of this year. But the main downward pressure is only likely to materialize next year.
Okay. Now I've got another big one here for not only SMEs again, but also for, of course, consumers. What is the outlook for South African interest rates?
Unfortunately, I think we will see interest rates go up. The Monetary Policy Committee of the South African Reserve Bank, they're meeting today and tomorrow. Thursday, they will announce the outcome of the interest rate decision. The decision, in our opinion, is going to be an interest rate hike, so a further interest rate hike. I think that's certain. The debate is by how much. Do they hike by 25 basis points, 50, or even 75? We have penciled in 50 basis point increase come Thursday, but there is a risk they could go with a 75 basis point increase. And that's probably going to continue. So our forecast is for 50 basis points this month. In other words, on Thursday, another 50 basis points. In September, another 25 basis points. So we see interest rates from its current level increasing by another 1% during the remainder of this year. And then next year, we see it increasing by 75 basis points. So where does that take your prime lending rate? It takes your prime lending rate back to a peak by around mid next year of 10-25%, which takes us back to the levels that prevailed prior to the pandemic.
Okay. My final question to you, Nicky, and of course, another important one, of course, how will the South African economy fare over the next 12 to 24 months?
Well, things are going to start slowing down. And as I've mentioned before, we have a very unsettled global environment. Globally, we've seen surging inflation, even in advanced countries. US inflation hitting 9.1% in June, which is a 40-year high. They haven't seen those sorts of inflation since the 1970s, when the world struggled with stagflation, which is high inflation and weak growth. And of course, in response to that inflation, you are seeing almost all advanced countries now starting, or they've already started, hiking interest rates far more aggressively. Now, as your low-risk countries hike interest rates, of course, it has implications for emerging markets. If your low-risk nations are offering investors a higher return in the form of higher interest rates, that means capital is going to move from high-risk countries towards your lower-risk nations, and that's going to put pressure on your high-risk countries like South Africa, which is an emerging and developing economy, and therefore contains an inherently higher level of risk. And that means there's going to be pressure on our capital flows. And if capital is flowing out of your economy, what does it essentially mean? It essentially means that people are selling rands and buying dollars and euros and British pound. And so those currencies tend to strengthen and your currency tends to weaken. And of course, that is a problem because that adds to the cost of production, it adds to imported inflation, and it adds to inflation in general. And as a result, we're seeing interest rates continuing to rise. Then you also, on top of that, have higher food and fuel prices, which by definition tends to slow things down because it also increases production cost and it erodes households' disposable income. So I think we can be pretty certain that things will slow. However, in South Africa, while consumer spending will start to moderate, it's not going to, in our opinion, implode. Consumers are seeing higher wages. They are seeing a normalization in their income. Many companies have returned to profitability. They are paying better bonuses. They are paying higher wage increases. So that will sustain spending to some extent. So things will slow down, but not contract. We're not heading for another 2020 kind of disaster. And at the same time, we also have the benefit of being commodity exporters. And in this sort of environment, commodity prices tend to do relatively well, and that will provide us with a little bit of protection, and it will shield us against a much weaker global environment. So altogether, we're looking at slower economic growth, without a doubt, but at least not, recession. So at this point, for this year, we're looking at growth of 1.8%. And for next year, when you see the cumulative impact of higher inflation and higher interest rates catching up with the consumer, we see things slowing a little bit more to 1.5%.
Okay. Nicky Weimar, thank you for those insights, Chief Economist of Nedbank Group. But before you leave us, Nicky, let's bring Olebogeng back on stage just for some closing remarks. Please join. Thank you for joining back. And to Nedbank, to you guys, it's been, of course, power-packed, inspirational, not all doom and gloom, but there's a little bit of gloom, but I think we've got to make that challenge on ourselves. But Olebogeng, just on your side, maybe a closing words of encouragement, advice, tips, anything you've got to close on?
So I think maybe just 2 points. Firstly, in response to a colleague from Tatra there on the chat, absolutely. I think just be on the lookout. You will soon be able to see assets of that kind of value, such as a commercial vehicle being traded on a platform like Avo B2B. That actually is the intent, because how we've thought about it is, it's for the entire B2B market, regardless of size. So I know that I emphasized a lot the small businesses play in my conversation today, but even larger businesses, corporates, are interested in using platforms like these as a route to market. So I think that's the first point. And just a small anecdote, actually, we I think 2 months ago sold a vehicle on the B2C side, kind of half that amount my colleague was quoting there. So if we can do it on the consumer side, certainly those are the quantums we'll be dealing on the B2B side. And then I think there was also a question around, I think from Imelda, the B2B marketplace is operational. You can, and thanks so much. I see someone has already posted the link, but I think there's another link you can use, avobusiness.africa. And then secondly, feel free to get in touch with myself via LinkedIn or on my Nedbank email, Olebogeng Mogale@nedbank.co.za, to talk to you guys some more about it. But I think my parting shot is that e-commerce is definitely a great lever, particularly for smaller businesses. We're seeing the barriers of entry in terms of routes to market being reduced by the growth of e-commerce in the country, and you really want to take advantage of that.
Thank you for that. Nicky, on your side?
Yes, from my side, I'll just close saying that we are going into a tough time, and South Africa, we are used to operating in difficult circumstances. We've had to contend with load shedding for a long time. That pressure continues. We've had to deal with social unrest in July. Now we are also coping with the fallout from climate change in terms of the increased frequency and extreme weather events. And the world economy is becoming a more challenging place, fraught with geopolitical risk and really unexpected shocks that is very difficult to prepare for. And within that context, I think the focus for all of us should just remain on, driving to become as efficient as possible, enhancing your flexibility, developing your agility as a business, and making sure that you keep a keen eye on cost, and by all means partner with your bank to make that as highly likely for you as possible. And if you can achieve that kind of flexibility, that kind of agility, I think you can survive these difficult circumstances.
Thank you for that. Thank you, guys, and to Nedbank, of course, for powering this up this morning, and Nicky and Olebogeng, thank you very much for your insights. Impactful. We know that our attendees out there have really enjoyed. And to all our attendees, thank you again. It's because of people like you we can do what we do. Truly grateful for attending this morning. We've hoped that we've exceeded or smashed your expectations, because I've certainly, again, learned a great deal this morning. So thank you very much to all. We look forward to engaging again in the near future. Take care. Thank you.
Thank you.